Hi, very good afternoon to all of you, and welcome to another webinar by the Global Investing team. I'm glad that you're all part of this webinar. As most of you must be aware, this is an ongoing series of webinar where we try to educate customers, potential customers of global investing, talk about what global investing is, what the context is, how to set up an account, what are the benefits of investing in global investing. So today I thought I'll take a little bit more time and deep dive a little bit into the process of setting up the global investing account itself. Of course, I'll spend the first couple of minutes setting the context in terms of why one needs to even open a global investing account, what are some of the features, what are some of the benefits, and then I'll jump into the process, because I think over the last few webinars that we had, there were quite a few questions around process and how does one go about setting up this account. I'll briefly touch upon things like taxation and how it will work. And as usual, we'll have a Q&A session in the end. We'll try to answer as many questions as possible. If you're not able to answer those, then you can obviously write into us at any point in time. So the main agenda that I wanted to cover today, of course, is how to set up a global investing account. But first, I'll talk about what are some of the features of this account. Accounts for investing in US markets have traditionally been available to Indian investors for a long time. For the last 8 years, 10 years, 15 years, there have been US brokerage firms who have been offering this service. However, the main deterrent for people to open a global investing account is to say that typically a large value of transaction needs to be done in order to justify the commissions, in order to justify the forex costs, in order to justify the account minimums. And the second thing is, of course, that the expensive shares that are available in the US listed market. So how does one go about it? And the third thing has been in terms of the process, saying that it's a cumbersome process in terms of just the account setup, in terms of, how do I remit funds? It's a cumbersome setup in terms of tax filing and how easily it is to be able to evaluate all the tax statements from the US and file it here. So these are the three large things that were a deterrent for any customer to open a US investing account. And those are precisely, if you look at it, the features of the existing global investing account that HDFC Securities offers, which means that it's become very easy for a customer to set up a global investing account. That's been our main focus. In terms of the product features itself, no account minimums, which means that you can open an account today online. You can decide to fund this account with as small an amount as $100, $500, $1,000, 3 months, 6 months later. And you're not charged any fee for not maintaining account minimums, unlike traditional platforms that are there. Very low commissions. There are 3 pricing plans available on the global investing account. If you go to the global investing website on HDFC Securities, you will be able to see these plans. Commissions for the subscription plan are as low as 1 cent per share. 1 cent is the equivalent of 1 paisa in the Indian rupee. So it is as low as 1 cent per share. In terms of account insurance itself, the US government provides an account insurance for every retail investor of $500,000, and this comes as a standard feature on the global investing platform. So these are the large product features that are there. In terms of the platform features itself, there is real-time prices available to our subscription customers. Also available to our subscription customers is access to analyst reports and ratings. Analyst reports basically gives you a list of reports prepared by equity research analysts who are covering a specific stock. And analyst ratings are a accumulation of the various ratings given by, let's say there are 20-25 research analysts who are covering a specific equity stock. Then the analyst rating is nothing but a accumulation of all these ratings and a weighted average of all these ratings. The other feature, the other deterrent that I spoke about earlier was in terms of the expensive share prices. So which is why we have a platform feature on global investing called fractional shares, where let us say today you take the stock value of Amazon as a stock, right? It is close to $3,200 for 1 share of Amazon. Now, obviously, that's very expensive from a retail investor standpoint. Now, what if you had $10 and you want to invest in Amazon shares? On global investing account, that is possible because of the feature that we have called fractional shares, where you can invest as low as $5, $10, $20 in any share, irrespective of the price of the share. And you are allotted the fraction of the share depending on the price of the share. So let's say the price of the share is $3,000 and you are investing $1,000 in that share, then you are allotted 1/3 of the share. Your dividends rights, your voting rights, all of that remain intact. And of course, in terms of platform features, we spoke about it in detail in the last session. There is something called as curated portfolios or thematic portfolios that we will soon be offering on the platform. These are expert theme-based portfolios that are available for customers to invest in. In terms of the process differentiation, again, like I said earlier, the process of account opening, process of fund remittance was very cumbersome. So now we have tried to simplify that. There is the onboarding and the the account opening process is completely digital, and this is what I want to emphasize on today. So in my later slides, you will see that we'll get into the account opening process in much more detail, fund remittance process and tax filing support. But the whole idea is that is something that was a deterrent for customers to invest in earlier. Now we have removed that deterrent, and as a result, we've seen very good traction. And just to put some numbers out there, in the last 1 year since we've launched this product, over 10,000 customers have actually subscribed to it, have actually done a fund remittance, and have started investing in US markets. Now, those were some of the features specific to the global investing platform. Coming to the benefits of a global investing account in general, RBI through its LRS scheme allows every Indian individual to remit up to $250,000 annually in global accounts. It can be either for investment, it can be for travel, it can be for education. Now, let's say in a specific year, like in this year, there is a very low likelihood that you're going to do any international travel. And let's say that your other expenses also, you don't cover the 250,000 limit that RBI allows you to. In that case, this platform becomes very useful for you to be able to utilize RBI's LRS scheme and invest in global markets, so you're able to exhaust your limit. The second is global diversification. If you already have exposure to Indian equity markets, then this platform is ideal for you to start diversifying your portfolio by investing in US markets. Of course, US markets is the world's largest equity market in terms of market capitalization. We discussed about it in the last webinar as well. Just the NASDAQ and the NYSE, two largest stock exchanges in the US, are more than 10 times larger than some of the other stock exchanges globally, and are about 20 times larger than the BSE in India. So that will give you an idea of the scale of some of these stock exchanges. And if you look at the overall market capitalization of all listed companies in the world, the US markets account for over 50% of the market capitalization. So half the market capitalization of the world resides in the US. And through this global investing platform, now you can invest in this large market. It's a fast growing market. We are all aware of companies like Netflix, Facebook, Google, Amazon, and these are all companies that an individual can invest on the global investing account online. Currency benefits, we're all aware that in the last 5 years, 6 years, 7 years, even if you look at shorter time frames, in the last 1 year, 3 years, the rupee has been depreciating against the US dollar. Now what global investing account offers you is the opportunity to benefit from this depreciation, to build a globally diversified portfolio, so that whenever you decide to say bring back your funds to India, then you benefit from the currency, from the rupee depreciation. It offers you liquidity advantages. As I mentioned, it's the world's largest equity market. If you look at order book liquidity, if you look at some other traditional measures of liquidity, US markets are some of the most liquid markets in the world. And even through instruments like ETFs and all that, for example, you get high liquidity. So the idea is these are some of the key benefits of opening a global investing account and investing in US markets. Now I'll quickly cover the process. We'll get into to a lot of detail on the process side, but just so that it's very clear from the onset, it's a very simple 3-step process that a customer needs to do in order to open a global investing account. The first step is what I refer to as digital onboarding. I'll talk about it in detail in the next slide. The second step is online remittance form, where one needs to fill in a remittance form online in order to remit funds from his savings account in India to the investment account in the US. And the third piece is the actual investing or trading, which also happens completely online. So coming to the first piece on the digital onboarding, when you go to hdfcsec.com/global investing, or when you go to hdfcsec.com and click the dollar icon that is there, you are navigated through the global investing page. When you do that, you are asked to verify your phone number, email ID, and fill in a very simple online form. After that, you have to select one of the 3 pricing plans. And post that, you go on to step 2, where you complete an online KYC form. This is a mandate from SEC, which is the Securities and Exchange Commission in the US. It's the equivalent of SEBI or here. So whenever you open an Indian account, you fill an Indian KYC form. Like this, you have to fill in a US KYC form completely online. The third step is you upload your ID proof and address proof. Your PAN card is good enough for your ID proof. Your Aadhaar card is good enough for your ID proof and address proof. You upload these documents and submit. And that is it. You're done with the account opening process. Within 24 hours, you will get a confirmation of the account approval. Our account approval rates are over 95%. There is a small chance, which is less, about 2 to 3%, that the account may be rejected. This typically happens if your document that you uploaded, the copy is not very clear or some information is missing, in which case our representative gets in touch with you and then they guide you on how to upload the correct ID proof or address proof and how to open the account. So this is the first step, digital onboarding, completely simple. It takes only about, I would say, on an average 7 to 10 minutes to do all these 3 steps, which is to verify your phone and email ID, to fill in the form online, and if you have the documents ready, to upload the ID and address proof. It takes 7 to 10 minutes. From the time you have uploaded this, your account approval happens within 24 hours. This is the first step. Second step is the fund remittance process, where you fill in an online remittance form. Now, since HDFC Securities is offering this platform to you, they've also tied up with HDFC Bank in order to make the fund remittance process digital. So if you're an existing HDFC Bank account holder, all you need to do is log into the platform once your account is approved. Click on a button called Add Funds. And there you mention the amount that you want to invest. You fill in your Indian HDFC bank account details, the beneficiary details, which is the account that will receive these funds, which is your investment account in the US, are auto filled in because the platform is aware we've already opened the account for you. The third step is scheduling a date, time, and address for the pickup of the form. The reason the pickup of the form is mandated is because banks still require a physically signed copy of the form. So once you've filled in this form completely online, you download this form, sign it, and keep it ready. We have a logistics partner who will come to the address that you've specified on the specified date and time, and he'll pick up the form and submit it to the HDFC bank branch. In the case of metro cities, this process takes about 1 to 2 days in terms of pickup and drop off. Of course, subject to availability of the logistics service, which we saw got impacted in the last few months. But under standard operating procedure, it should take no more than 1 to 2 days for metro cities, 2 to 3 days for non-metro cities for the pickup and drop off to happen. Once this drop off happens, your account gets debited on pretty much the same day for the funds that you want to remit. And once this debit of your Indian savings account is done, within 2 to 5 working days, the funds will reflect in your investment account. Since this is an international wire transfer, the standard SLA offered by any intermediary bank is 2 to 5 working days. We've seen fund remittances happen within 1 day as well. Majority of them happen within 2 days, but you have to remember the standard fund remittance SLA is 2 to 5 working days. Now, the third step, let's say you've opened the account, let's say you've remitted the funds to your US account. The third step is online investing. Because now you have a global investing account, you have funds in your global investing account, you can now freely choose from over 3,500 stocks and ETFs. And this covers pretty much the entire universe of stocks and ETFs, liquid stocks and ETFs that are listed on NASDAQ and NYSE. It will cover all the large cap, mid cap, and small cap stocks, which are highly liquid. Once you click on a stock detail page, let's say you pick Amazon or Apple as a stock that you want to invest in, you will see multiple amount of information available about that stock, which helps you in the investment process. For example, you will see a pricing chart, which will show you the historical price trend for the last 3 years. You will see all the curated news feed related to that stock available. You will see all the financials, whether it is the account statement, P&L statement, whether it is a cash flow statement, whether it's a balance sheet. You will see all the financials and the financial ratios for that specific stock. What you'll also see is a lot of social media feed available related to that stock. Today, for example, a lot of the breaking news related to a stock, or a lot of the analysts who have coverage on the stock, tend to post real-time updates on social media like Twitter. Like there is another website which is fairly famous in the US called Stock Tweets, which we have a subscription to. So you will see all the social media feeds in that stock detail page. And then the other unique feature for our subscribed customer is something called as analyst opinion, which is where you will also have access to analyst reports and ratings, where, as I mentioned earlier, if there are about 15-20 analysts who cover a specific stock, you will be able to see their combined rating of whether it is a buy, sell, or a hold related to the stock. As a platform, it is very simple for a retail investor to use. There are three types of orders that you can place on the platform. There is a market order, which goes and executes during market hours. You can place the order anytime. It executes during market hour. It executes at the best price that is available. There is a limit order that also executes during the market hour. You can place the limit order anytime. However, in the case of a limit order, you can specify the price at which you want to buy or sell. That's how it's different from a market order. The market order will get you the best price available at that point in time in the market. In the case of the limit order, you specify the price, and only when the price on the order book hits that specified price will your order get executed. The third order type is a stop loss order, where you can specify a trigger price, saying that if the price goes below a certain value or above a certain value, trigger a transaction for me. As soon as the price hits that value, a market order gets triggered for your stop loss action to take place. Now, what is not allowed? That is also equally important to understand along with what is allowed. What is not allowed is typically governed by RBI regulation. Like I mentioned earlier, the entire process of fund remittance falls under RBI's purview under the liberalized remittance scheme of RBI. So also in the liberalized remittance scheme, RBI specified that no sort of speculative activity should be allowed, which means that as an investor, you're not allowed to trade in futures and options. You're not allowed to do shorting, which is again considered speculation, and you're not allowed to have a margin trading account. So your global investing account is a completely cash account that's available to you. Settlement cycle is T+2, which means that if you sell shares today, the funds, your actual account balance gets reflected on the same day. However, it's available to you as buying power 2 days from now. Also wanted to touch upon taxation very quickly, because this has again been a point that's been raised in multiple webinars in the past. So the framework under which all taxation is governed is something called as a double tax avoidance agreement that the US and India have signed. What this double tax avoidance agreement in essence means that any Indian resident or anyone whose taxable income falls within this DTAA will not be subject to tax twice over for any income he's generated in US or India. So if there is any income you're taxed in the US, you will not be taxed in India. If you're taxed in India, you will not be taxed in the US. That is what this DTA in essence means. So obviously in the context of equity investments, there are two types of gains that you can realize. There is a capital gain and there is a dividend income. Let me cover the dividend income first, which is much more simpler. So in the case of dividend income, there is a tax deduction at source that happens in the US. Which means that let's say you're about to receive $100 dividend payout from a company. $75 will get remitted to your account. For the remaining $25, you will get an acknowledgement from the income tax department in the US stating that $25 worth of dividend has been already deducted. Tax has already been deducted, and this comes in the form of a W8 Ben form that is available again on the platform. You can download it from the platform. And once you have paid this taxes in the US, you don't have to pay the tax again here in India. In fact, you can offset it against any tax liability that you have, since dividend in this case for unlisted securities falls under your regular income, which means that, it falls under income from other sources, which means that you can offset it if you have any other Indian tax liability towards income from other sources. In terms of capital gains are not taxed in India, which means that let's say you sell 10 shares worth of a stock at $50 each. The entire $500, 10 into 5, 10 stocks into $50 each. So 10 into 50, and the entire $500 will come to your account. So you're not taxed in the US for that. You will have to show this as part of your income tax returns filing in India. As far as tax laws in India go, all the investments that you make in US equity markets is considered as investment in unlisted securities. This is because even though these equities are listed in the US exchange, they are not listed in an Indian exchange. So as far as Indian taxation goes, they are considered as investment in unlisted securities. In India, you're taxed either at the rate of the short-term capital gains or long-term capital gains, depending upon your tenure of holding. Anything less than 24 months for investment in unlisted securities is considered as short term. Anything more than 24 months is considered as long term. If it is long term capital gains, the tax rate is 20%. If it is short term, it is the same as your marginal rates or the slab rates that the income tax department provides. Yeah. So thanks for a patient listening. I think I've pretty much covered all the points that I wanted to cover about the benefits of the platform, the features of the platform, about the entire process of the account opening, account setup, and taxation. So if there are any questions right now, I'd like to take them. I was told that some of the questions will pop up over here. So I'm going to just end the presentation and okay. I do see that there are a few questions here. Is this open for resident individuals or non-residents only? Since it said that minimum of $100 is required to open account, does this mean that INR equivalent can be deposited? So to answer your first question, is this open for resident individuals or non-residents? It is open for both resident and non-resident Indians. It is open only for Indian citizens. You have to remember that. As long as you're a citizen of India, whether you're a resident in India or a non-resident of India, it doesn't matter. You can open this account. The second question is INR equivalent can be deposited. Typically what happens is when you do an LRS, under the LRS scheme, when you do a fund remittance, when you fill in this form, what you specify is a US dollar amount. So let us say that you say I want to transfer $100 or $1,000 from my India account to my investing account in the US. What the bank does is from your Indian savings account, they deduct the equivalent of INR from your Indian savings account. They obviously give you an exchange rate that is prevalent on that day, and they deposit the corresponding US dollar amount in your global investing account. Okay. There's a follow-up question to that. It says, what is the procedure for transferring funds from bank accounts like from Dubai? So two things. One is as a non, I assume this is being asked as a non-resident Indian, because if you have holdings outside of India, you probably have a source of income outside of India, and hence you have a bank account outside of India. So if you're transferring funds as an NRI, then you don't fall under the LRS purview, which means that you can transfer funds freely from your bank account anywhere in Dubai. The beneficiary details as to which account it needs to go to are anyway available on the global investing platform as soon as you log in. So whenever you're doing a wire transfer or any fund remittance from your foreign bank account, all you need to give them is the details of your beneficiary account, your global investing account, and the wire transfer will take place. Okay, so the next question is, what is the LRS scheme by RBI? I hope I've answered that during the course of the presentation. LRS stands for Liberalized Remittance Scheme. So basically, RBI has put in a framework for saying that how much it will allow Indian residents to invest globally or to remit funds globally. It is not only for investment. Like I said, it can be for multiple purposes. But this is the framework that governs all of RBI's rules for fund remittance abroad. Whether it is for travel, whether it is for education, and like that, there are a list of some 10-12 purpose code that RBI has clearly given. One of those purpose codes is investment in equities in the US, investment in global equities, and that is the purpose code that you will use when you are remitting funds from India to your US investing account. The next question is it only for NASDAQ? Coverage is right now for both NASDAQ and NYSE. So all stocks listed, all ETFs listed on NASDAQ and NYSE are covered. The follow-up question is whether SIP is allowed. For now, we don't have an SIP facility available. So typically what customers do is, let us say I want to invest small amount of $100 each over the next, let us say 12 months. What they do is in one shot, they remit, let us say $1,200 or $1,500 from their Indian bank account to the US bank account. They keep it there, and month on month, they keep investing smaller dollar amount. So what has happened is, let's say the rupee depreciates over the next 12 to 15 months, then you've got the currency advantage as well, and there is a small interest payout also that happens for the cash balance that's available. Do we have to send an A2 form every time we make an additional investment is the next question. The A2 form is not linked to the investment. The A2 form is linked to the fund remittance. Like I said, if let us say you believe that you're going to invest $1,000 in the next 12 months in the US market. So today you fill in the A2 form once, which is for transferring $1,000 from your Indian bank account to your US investment account. The investments from that point on are all US denominated, so there is no fund remittance that happens with every buy and sell of the investment that is there. What is the annual charges and the brokerages for this account? Let me cover that in a little bit more detail. I spoke about the different subscription plans available on the website, but I'd like to cover it in a little bit more detail. There are 3 pricing plans that are available on the platform. At one end of the spectrum is the basic plan, which is our most easy to entry plan. There is no one-time account opening fee. There is no annual subscription fee as far as the basic plan is concerned. Commissions are $3 per trade. Coming to the second plan, it is a silver plan. It is a subscription plan where the annual subscription, there is again no account opening fee. The annual subscription is 3,999 rupees. It's charged year on year at the beginning of the year. Commissions for the silver account are $1 per trade. The third plan is the gold plan. Now for the gold plan, again there is no account opening fee. The annual charges are 13,999 rupees and the brokerage is 1 cent per share. It's the lowest brokerage plan out of the three plans. Obviously, with the subscription plans, it is not just a question of lower brokerage. There is also other benefits that you get, like I mentioned, for our subscription customers. When we launch the curated portfolios, they will have access to all the curated portfolios. Today, only our subscription customers have access to analyst reports and analyst ratings. So there are a lot of features on the platform. Gold customers, for example, will get a dedicated account manager instead of reaching out to the standard helpline that is available. So there are a lot of additional benefits and a lot of product features that we will be offering in the next 3 to 6 months that will be available for subscription customers. I think the subsequent questions are also the same, so I have answered that as well. The next question is it only for US markets or can we invest in any market? For now, it is only for US markets. Eventually, global investing, we will be expanding to other European and Asian markets, but that is at least 6 months away, I would say. Right now, it is only for US markets. And the other thing to remember here is that in terms of the US market, right? US market is not just about US listed stocks. There is something called ADRs and GDRs, which are American Depository Receipts and Global Depository Receipts for companies that are listed globally, which are now traded in the US exchange as well. For example, even if you take Indian companies like Infosys, Wipro, some of the top tech companies that are there, right? They're all listed on Indian stock exchanges, but they also have a corresponding ADR and GDR in the US market, so you can trade them. Similarly, European listed companies, some large companies like SAP or some of the large pharma companies, they also have ADRs and GDRs that are listed in the US market and you can trade them. Of course, the other option is also that you have ETFs in the US market which cover all global markets and track all global equity indices, that you can invest in a ETF in the US market that covers the Sensex, for example, or the Nifty. You can invest in an ETF in the US market that covers the European stock exchanges. Okay. Next question is, yeah, I think one question is, I have an existing US account. Can I transfer from there? I assume if you have a savings account, yes, you can transfer funds from your US savings account to this global investing account. The only thing to remember is the account has to be in your name, which means that the US saving account also has to be in your name, and this global investing account also has to be in your name because there is a name match that's done for any incoming or outgoing remittances of fund. If you're asking about share transfer, saying you already have a US brokerage account, that is also allowed. There is something called as a share transfer form that will be available with your existing broker. You can fill it up with them and say that I want to transfer this from my existing brokerage account to my new brokerage account that I've opened through HDFC Securities. There is another question saying, I'm staying in Saudi Arabia, can I open this account? Of course, you can open this account right now. You don't have to be physically present in India to open this account because, like I said, it's a completely digital account opening process. So you can go to HDFC Securities on your web browser from Saudi Arabia. You can open this account. The only condition is you have to be an Indian resident. Uh, so people have asked about charges once again and contact details. I think charges, I have explained the 3 pricing plans that are available. In terms of contact details, they're already available on the website. There is a chat available, live chat available on the website. There is an email address available on the website, and there is a phone number. Please feel free to reach out to us through any of these mediums. We will answer your any other queries in terms of guidance. If you need handholding in terms of how to go about step by step opening the account, we will have a representative who will talk. So I think there is a question around OCIs right now, whether this investment option is available for OCIs. It is not, because OCIs are, don't fall into the category of LRS and investment process for Indian citizens. So this platform currently does not support account opening for OCIs. Okay, so someone has asked a question about fund withdrawal. What happens if I want to withdraw the funds? Fund withdrawal is also a completely digital process. Just like we have an add funds button on the platform, if you log into the platform, you'll see there will be a withdraw funds button. So you can withdraw the entire amount of cash, you can withdraw a partial amount of cash. That is also a digital process. You click on withdraw funds, you specify the amount you want to withdraw, whether it's the full amount, partial amount, whatever the US dollar amount is. And then you specify the beneficiary account that you want to withdraw it to. It need not always be the same account as the funds that you've deposited it from. However, there is a 3-factor authentication that happens, which means there will be an OTP sent to your email ID. There is a transaction PIN that you will have to provide, which you would have set up at the time of account opening. And the third one is, if you're withdrawing more than $10,000, then we also need an email confirmation. So you will be sent, if the withdrawal amount is more than $10,000, you will be sent a email will be sent to you over email. You have to respond and confirm that you are the one who's actually withdrawing it. Brokerage charges I have already covered. Account maintenance charges from HDFC. In addition to the charges that I have already mentioned, there are no additional account maintenance charges that are open. I think. Okay, there is another question. I think I've answered it previously, but it's important to understand this difference. So I'm going to try and answer it once more. It says, to purchase and sell the US stocks, does that mean my dollar to INR exchange rate will get applied twice? No, it is not the case. Like I explained, the fund remittance is typically a one-time or two-time process. In a year, you may remit funds once or twice, whereas your investment activity is ongoing, which means that buying and selling of shares, trading in shares is ongoing. So once you have done this fund remittance, your funds have now been converted from INR to USD. All your investment activity of buying, selling, dividend payout, all of that happens in US dollars only. Only when you decide to withdraw back these funds is the second conversion that happens from US dollar to INR. This is an interesting question. It says, can I buy an inverse ETF or does it count as shorting? No, buying an inverse ETF doesn't count as shorting, because ETF by definition is a instrument that's listed on an exchange. So if the inverse is tracking the either, let's say, the volatility index or some other equity index in an inverse manner, then you're allowed to buy and sell that. So it's another very deep question on the tax side. By the way, we do have an FAQ section on the website. I would request all of you to visit that. We've answered a lot of taxation related questions in detail over there. So the question over here is, for tax purpose, the dividend and capital gains are taxed at what exchange rate? So at what exchange rate do I need to convert? It's very simple. Whatever month you realized so this is a very RPI specific nuance again. For some reason, they like to pick a reference rate which is called as the SBI telegraphic rate or SBI TT rate. So whatever month you realize the short-term gain or the long-term gain, or whatever month you got the dividend payout at, you have to take the last date of that month. You have to take the SBI telegraphic transfer rate of INR to USD or USD to INR of that specific day, and you have to apply that for conversion. And in fact, all the statements that we prepare are also typically like that. So all the P&L statement, taxation statement that you will see will adhere to this norm. One question is, do you have an app or is it only browser based? It is right now only browser based. We are in the process of building a mobile application as well. So you will see that in the next 2 to 3 months, it is not only on your laptop browser or mobile browser, but even on your mobile app, you will be able to answer. Another question related to withdrawal. So I think I've already answered that. So I think there is one question related to security of the investments and how secure these overseas investments are. So like I said, HDFC Securities has done their complete diligence in terms of evaluating the broker partner, in terms of evaluating the processes, all of that's been done. The broker partner in this case is a US SEC registered broker dealer called Drive Wealth. Now, Drive Wealth is registered with the SEC, which means they are covered by the complete norms of SEC. They also are registered with FINRA and SIPC, which is the insurance agency provided by the US government, which means that in terms of security, tomorrow, if anything happens to this broker dealer, the US government has insured your account for $500,000. I think. Okay, I think there is a question about fund repatriation, which I've already touched upon. There is one other question which says that on a scale of 1 to 10, how strongly do you suggest investing in foreign US markets? So I don't know if this will constitute as investment advice, but let me answer it in a way that can explain at least our thought process. The point is that the reason to invest in foreign markets, like I said, there are multiple reasons. I think timing should be the last of the reasons. So it should not be a question of saying that whether markets are at an all-time low or all-time high and when should I invest. The key point should be around diversification and around opportunities. Diversification, because let us say you already have an equity investment portfolio in India. Now you're looking at some sort of diversification where you want to build a global portfolio, which doesn't have a very high correlation with your existing portfolio. That is when you have to start looking at global investing. Second is in terms of opportunities to invest. Now there are certain opportunities available in the US that are not available globally anywhere. It doesn't matter whether in India, you're in Middle East, you're in Europe. There are domestic opportunities are always limited, whereas US is known as the hotbed of innovation for most technology companies. They're known as the hotbed of innovation for a lot of business model related automation innovation, whether it is in the banking space, whether it's in the retail space, all of that, right? So these opportunities will only be there in the US market. So you will have to have an account in the US market. You will have to have a US dollar account to invest in those. And those are the primary reasons which I would say would strongly suggest that you need to have a diversified portfolio of Indian equity, US equity, a mix of all of them. Are all activities mentioned possible from home using internet? Absolutely, yes. What is the timing for trading? Timing for trading, US markets are open from 9:30 a.m. to 4 p.m. This is the East Coast time. In US itself has 3 different time zones. This is the East Coast time in the US, which will typically correspond to about 7 in the evening Indian time to about 1 in the night Indian time. Platforms, there is a question around valid till cancelled order, limit order, which has a validity of 45 days. I think for more from a governance standpoint, we have limited that functionality. We only had limit orders which are valid for 1 day in the market, and your stop loss order is valid for 28 days from the day you placed. So repatriation of funds, again, I think we've answered that. Minimum amount we can invest, there are no minimum amounts. Like I said, even if you have $1 today, with $1 in your account, you can go and buy an Apple share or an Amazon share. So there is no such minimum account but having said that, for you to have even a meaningful portfolio or some sort of, at least 3, 4, 5 stocks that you want to build a portfolio around, I would recommend if you're a first time investor, if you want to start off really small, also don't go below $100. Try to make it anywhere between $100 to $500 just to start a very small investment portfolio and to start investing in global markets. Fractional stocks are available to you. So even with $100, let's say you can invest $10 in the top 10 tech companies, and you'll still own Amazon, Apple, Facebook, Google, Netflix, all of these with just $100 in your pocket. So I would say start off with that sort of amount. Although technically, even with $1, you can go and invest something. Why are there charges for withdrawing proceeds back into the Indian account? So there is a $35 fee for withdrawing funds back into the US account, withdrawing funds back from the US account into the India account or any global account. This fee is charged by the intermediary bank. This is not charged by the global investing platform, or it's not charged by the broker. And we, as part of the global investing team, are working closely with multiple intermediary banks. We are in the process of getting this fee lowered, but this is a pass through for us. Right now the bank charges is $35, so the bank charges you $35. The day either the same bank or some alternate banks we are evaluating decide to drop these charges to, let's say, $10, then we will obviously charge the customer also only $10. So this is something that the intermediary bank charges the customer for the fund transfer process. Will you provide a data feed? Yes, we do provide a live data feed from the exchange directly. So another question is, I have an account in the UK. Can I transfer funds from there? Yes, the answer is yes. Can you suggest some good shares? Like I said, that would amount to advisory. So I would rather take it up on a different call or address it slightly differently. Okay, so the question is, how are these shares held? Good question again, because it's slightly different from how it works in the Indian market. So in the Indian market, we have something called as a demat account. In this demat account is typically linked to, demat stands for dematerialized form. This is when all the shares got dematerialized in India. And these demat accounts in India are typically linked to a bank account that you hold. In the US, this is called as an investment account. So your investment account is not necessarily, or the account that you hold with this broker dealer is not necessarily linked to a bank account, which is why you can transfer funds from any bank account globally within the US, from India, or anywhere globally. You can transfer funds to this investment account. And just like we have a depository here, there is a concept of custodian in the US. So with the broker dealer partner that we work with, which is Drive Wealth, the custodian is Citibank. So custodians are appointed typically by the exchange, and Citibank is one of the largest custodians in the US market. I think pretty much I have answered most of the questions. I'm just trying to see through these questions and see if there is anything that I'm not been able to take. Okay, so one question is, in the basic subscription, is it $3 per share or per trade? It is per trade. So question is, can we remit funds more than 2 times a year? Of course, you can remit funds even 10 times, 100 times a year. There is no cap on the number of times you can remit funds. The only cap is that the total amount should not be more than $250,000. So SBI TT rate that I mentioned, one question is, where can I find this? This is typically published on the RBI website. It is published as an annexure on the RBI website. It's part of their monthly statements as well. Otherwise, if you go to any SBI bank branch, if you walk into the bank branch will offer you this rate as well for that month. Investment in mutual funds, is it allowed? No, as of now, mutual funds are not there. It is only it's only stocks and ETFs that is allowed. So I think that pretty much covers the questions that we had. If there, in case, for paucity of time, if we have not been, because we're also heading to the end of the webinar, in case of paucity of time, if we've not been able to answer any of your questions, or if some of the questions are not very contextual for this discussion, then I would request that you can write into our helpline. You can call our helpline. You can chat with us on our helpline. That's all available on the website. We'd be more than happy to assist you. So thanks everyone. Thanks for participating in the webinar.